Get a quick mic check here. Make sure everybody can hear me okay. I was going to start rapping, but I figured we'd get right into the presentation for the hour. I was going to start battle rapping D-Man. this is Nate and trading's my game. Okay, so today, yeah, the singing, the rapping, and most of the dad jokes are for the VIP sessions. We continue to just kind of get a pull in the market here. I think if we can come down into 67.25, we'll get a little bit of a bounce. I took, while D-Man was on the mic, a iron butterfly for 67.50. 10 wide on either side, so 20 wide iron butterfly. I think we're going to kind of come back to that level. The two biggest levels right now are 67.50 and 67.25. So I think we'll kind of rally back into the end of the day just a little bit. That's at least my thought process from the gamma exposure levels. In Thinkorswim, I do it as an iron condor, and then I just change the strikes. So that's how I do it, Teddy. But I'm going to kind of leave that there because I want to get into the focus of today, and that's how to set up a trade plan, right? And when we're trading, one of the things that becomes the most important, I think, and I imagine D-Man and Mr. Bear would agree with me, is to have a plan and to stick to that plan. Too many of us, when we get started, just get into something because we maybe like the way it looks, or somebody tells us it might be a good one to get into, and we buy it and we follow somebody, and then we don't actually know when we're supposed to get in and when we're supposed to get out, right? And even though it was a recommendation from somebody else, I think it's really prudent that you are able to manage that trade, because once you put it in your account, it's your trade, right? You've made the trade, you've chosen to hit the buy button. Now let's make sure you have a plan. And so I'm going to use LULU here. I like this LULU earnings bump, right? We've got a gap up since earnings. We look like we're starting to rally back here from being down quite a bit. And I think we've got this bump, and now we could potentially get a move up, a continuation move up out of this from the earnings bump. And if you look at LULU today and you look at the overall market today, LULU is not down at all. It's actually above its VWAP on the day, and the market is kind of selling off. So I think LULU is strong, and when the market decides it wants to get up and get going, I think LULU will go as well. So let's set up a trade plan on LULU. And the way I'm going to do that is I'm going to look at the pattern that we're in. This is in a 35-minute squeeze. It does have a 65-minute, but the 30-minute, it looks pretty good right now. If you know me, I love a 30-minute squeeze. And what I'm going to do is I'm going to start marking up this chart, right? So the first things I'm going to mark up, I'm going to mark the spike high, right? I always want to know where that is. And then we use volume profile quite a bit, and you can see volume profile right here. We're coming right into our point of control, and because it's a little chunky, this is sort of a point of control node area, right? This is where the majority of the buyers are, And if we can stay above that, then we are in great shape. Okay, so I'm going to make these red. So my thesis for LULU is a push back up after earnings. Okay, so the trade plan that I'm developing is I need to know where a good place to get into LULU is, where am I going to stop out, right? So using volume profile here, I'm going to come down to an area where the volume just completely drops off. You see this ledge right here. And I'm going to put another line in there as my value area low. Okay. So here is, and I'll label it for everyone so we can see it. Why won't it label? Oh, that's really weird. I don't know why it won't label for me. Let's do this. Let's call that the, whoops. There we go. There we go. Nope, it won't open. Isn't that weird? All right, so we'll just type in, this is the, I don't know why these aren't loading. That's pretty interesting. Let me try a different chart real quick here. Oh, look, I can label it on this other chart and it shows up on this chart, but I can't do it. That's pretty hilarious. Okay, this is our point of control. Whoops. Our POC. Okay. And we have our target high up here. So I think that that LULU is going to move back up when the market decides to correct itself, and I'm going to play it long in a 30-minute squeeze. So there's two kinds of plays that I can do here. I can do a more aggressive play, which is options that are expiring at the end of this week. That would be this week's option contracts. And I could take those, you know, what's that? It's a 3 DTE. Whoa, that is the worst 3 I have ever drawn in my entire life. So we could do a 3 DTE, right? Or go out to the following week and do an 8 DTE, right? That's days to expiration. On a 30-minute chart, you can play a 3 DTE, but if it continues to go sideways, it doesn't give you enough time, right? And so you could go out a little bit further. Okay, thank you, Nate. Excellent 3. So I'm going to come up with 2 different trade plans here. And because I can't write on this chart for the strangest reason, why is it this chart? I feel like I've got something turned off. Maybe I'll just bring over this other chart. Okay, bringing over this other chart. I'm going to put it right in its place, right here. Now, let's see if I can write on this one. All right, so we have a 30-minute chart. We're back. So we can do this week's 3 DTE, right? Or next week's, and what it might tell us is it's more of a 9 DTE, right? So we have two options for an aggressive and a less aggressive, right? Does everybody understand how theta decay works? Theta decay ramps down the value of your option as it gets closer to expiration. Okay, and that's one of the option Greeks. We won't get into it too quickly, or too in depth. But if you are trying a short dated like a 0 DTE or a 3 DTE, and this just continues to go sideways, your option contract will not just stay the same price. Like all things considered, if we bought an option, 3 DTE option for right now at $2.45, and nothing moved until Friday, that would no longer be worth $2.40 per contract, right? Theta decay into the expiration date ramps up pretty quickly. So what I want to do is I want to figure out here, based on this chart, where my entry could be, what my risk to reward is, and then where my stop levels are. So we're gonna do that part first. Now, generally for a target, we use Fibonacci. We measure from the spike high. Oh, sorry, that's not the right one. We measure from the spike high to the low. This is a Fibonacci tool. And our extension is the 1272. So I'm going to put a mark there. I'm going to make it green, and I'm going to label it target. Target 1. Whoops, 1. Now you can do this in your own on your own charts, right? You can make all these markings. You can find your value area lows, your point of controls, your highs. You can set the pattern up and figure out what your trade plan is going to be. So from here, if we're buying right now, there's a tool on here that's called a long position. Okay. So if I am going to take a trade right now, and I'm going to use the value area low as my stop. So I move my stop up. And if I'm going to use the 1272 extension as my high, as my profit target, I can put this box on my screen and it shows me that I have a 1 to 2.3 risk reward, right? So I'm risking $4.41 on the underlying stock to make $10.23 on the underlying. Okay. So that to me is a good risk reward. Obviously, we don't want to be risking down to here and taking profit here. Then we have an inverted risk reward. That's not what we want. We want to make sure we have at least a 2-to-1 or a 3-to-1 reward to risk ratio. And that's where, we're putting the center of this right where if we were to buy that right now. All right, and that tells us what our risk reward is. It puts it on the chart, and then it becomes pretty clear as the trade develops, is this at my target or is this at my stop level? Do I need to get out? Should I be waiting for my target? It helps take the guesswork out of trading, okay? So in this case, let's call this one aggressive, right? We're going to, that should be 2 G's, right? Is that right? Who cares? Okay, so I'm going to look at, for the aggressive trade, spelling was not my specialty in school. So I am going to look at the option contracts, and I like the 210 calls for this week, which would be 12, 19, that's in 3 days, or it says 2 DTE, obviously, because we're into today. So the 210 calls for 12/19 expiration, and those are currently pricing at about, let's just call it $2. That's closer to the ask, but let's just call it $2. All right, $2 per contract. The 210 calls for 12/19, right? That's an aggressive play. And then the conservative play is what it's telling me is a 9 DTE. And on those, I like the 210s as well. Right? For 12, what's the date on that? 26. Obviously, we're closed on the 25th for 12/26, and those are currently pricing at kind of 360-ish, right? 360. Okay. So as you can see, this one is starting to pop up off of this point of control area and VWAP, which is a really nice, it's a great entry here. So for those of you that are aggressive, right, we can take the 210s and put them in. Hold on, let me do that. I'm just going to pick those up. You don't want to mark it into that because the spread is kind of wide. But I'm going to pick up a couple of those. And then we have some time on the more conservative trade. Okay. I got into that for $1.99 per contract. Okay. So now we have to figure out, and a lot of times it's really good to do this prior to the trade taking place, right? Because now what you want to do is you want to say, okay, let's say for argument's sake, I have let's say a $10,000 account, okay? And I have agreed that I am not going to risk more than 10% of that account per trade. Okay? Like that's the max amount I'm going to put into a trade, right? The actual risk in this case would be less. Okay, so I have a $10,000 account, and I'm going to do $1,000 in risk, in total trade risk. So given that, right, I can only put on how many contracts? This is some easy math. Five, right? I can only put on 5 contracts at $2 per contract, $2 per contract, because each options contract is worth 100 shares. Okay. So each contract that I'm buying is going to cost me $200. No, that's fine. Mark, you're good. I mean, it's good to know that math for both the aggressive trade and the conservative trade. All right. So if we're looking at the $2 contracts here, and we're only going to risk $1,000 in total in the trade value, then we can only take 5 of these. All right. And what we need to understand is that we are in a 1 to 2.5 risk reward scenario. Okay, so we need to realize that the trade we're making, how much our option contract is going to move, right? How much the option contract is going to move if it goes against us. Okay, so let's just do, for argument's sake, we take it just a little bit lower than this, and we're risking $4 on the underlying stock. Okay, now how can I figure what the value of my option contracts are going to be when we get to this stop level? Does anyone know? There's a couple of steps. Yeah, we're going to look at the delta of the option, okay? And so delta shows us the value that the option is going to, the amount the option price is going to move in relation to a $1 move in the stock. Okay, so right now the 210s are, let's just round it up to 40 cents, right? So for every $1 move in the stock, in the underlying stock, your option contracts are going to move by 40 cents. Okay, so if we have a $2 option contract, right, and we're risking $4. This is basic. There's a lot of other movement that happens in option pricing, and as delta moves, so does gamma, which turns into more acceleration. But this is like the basis of the explanation, right? Just so you get some framework. If we're going to move 40 cents for every dollar and we're risking $4 on the underlying, what's the value that we're going to decrease by? Yeah, $1.60. Right? So if we're looking at, hold on just one second. So if we're looking at 160, that's $160 per contract. It won't be quite that much because of the way delta works. But we have $1,000 in, right? And we want to let that thing decay. We want to let that thing come down into our stop area. How much of our $1,000 have we lost? Well over 50%, right? So if these move down below our stop level, we're in trouble. We're in trouble, right? So if we're going to risk $1,000 total, and we know, okay, maybe I'd rather only risk, my total value is $1,000, but maybe I'm only willing to actually risk $250 on every trade, then I need to size that down, right? I need to take less contracts. So in this case, maybe taking 5 contracts here is not the best choice because of the outside risk to your $1,000. Make sense? So you also need to know here what your max loss, your P&L max loss. So your max loss, what you'll allow, let's just say it's 250. Right? So then you have to do the math here to make sure that if you come into your stop level, you've got the range in which to come into that stop level. So maybe you're taking 2 contracts, right? So knowing that in option contracts, their pricing changes quite a bit, and that's on the aggressive trade, right? Because we're also going to deal with theta decay. Now on the conservative trade, that's a little bit different, because the conservative trade here, this was, let's put this in here. This was delta of 40, right? This one is a delta of 45. So nearly similar, but you have a lot more room within your option contracts to not have them deteriorate by 50%. Okay? So being able to understand that those things, as the trade goes against you, what you stand to lose and what your total risk and account size is, it's different for everyone. Okay? And that doesn't mean, it could for you, I'm going to move my stop up. Well, the reason we create these things is because we want to make sure that, how many of you have been in a trade before and you're like, oh my God, it's going against you this way. Like, oh my God, I'm going to stop out. It's just it's hurting. I'm down 60% on my option, and then you sell, and then it just goes like this. Put a 2 in chat if you've done that. You've hit your absolute, your accounts at, or the trades at minus 600 or 60%, and you're just like, I just can't take any more. And then right at that point or just near it, you get this bounce and it goes in the direction that you were hoping it goes in, right? Or you were planning for it to go. So not understanding that, this is a key level and that you might get a little flush through that as market makers run stops and then move back up is important to know. Right? It's important to be able to mark up your charts and know where those levels are so that you can then take the appropriate sized option contracts. Whoops, I don't know what just happened. The appropriate sized option contracts so that you can weather the storm if you come down here. Okay? So here's how I would make an adjustment to this trade, knowing that if we go full position and we come all the way down here to the stop, we're going to be outside of our, we just sort of picked a $250 max loss, right? Are you with me? So the trade plan could be, I'm going to buy, and then this is where writing up a trade plan is really important. So I'm also going to label this here with first target. Okay. And then I'm going to label this one as second target. Okay. So here is a different way to look at one of the, set up a trade plan. And you can, if you have TradingView, you can put these kinds of things on your chart, right? You can say, buying to open the 210 Cs you can say buying to open, let's say 210C. Okay, then you have to do these for 1219. Okay, and then you can write your plan. Add 210C at 202.46. Right, so if, right, you get your if-then statements. If price comes down to 202.46, right, the stop area, comes down to 202.46, add one more. Okay. If price drops below 202.46, and we're doing this on a 30-minute chart, so the 30-minute candle needs to close below our stop out area, so you don't get situations where you just get wicked here, but then it goes right back up, right? We're trading this on a 30-minute chart, so we want to do our stops and everything on a 30-minute chart. So if it drops below 202.46, stop out. Right? If price moves up to first target, sell. Sell half or all, right? And then if price moves up to second target, close, right? So then we have a trade plan. And so if you jump over to another stock and whatever, and then you jump back to your chart, you're like, oh, okay, great. This is perfect. Here's what I want to do for 1219. Yeah, price is coming into 202.46. And so what that means is we're buying one here. We're buying one here, right? And then if price goes up to here, great. We're gonna take profits on that. Okay? However, if price comes down into this area and holds, we're gonna buy another one. And then if it comes back up into here, we're going to sell the first one, and if it comes up to here, we're going to sell the second one. If price comes down here after we've bought our one and breaks this and closes on a 30-minute candle basis, we're going to cut the trade. So we have a trade, we have a plan for our trade, and now we can just let the market do what the market's going to do. Okay? Is there any questions there? I just kind of went on for a little bit. But Coach, are you retiring from teaching? That's pretty dope. So then we have a plan on our charts, right? Now, this also works before we get into a trade, all right? So if and I didn't go ahead and find a, why can't I grab that anymore? Here? There we go. Delete that, delete that. Okay, so here's a trade plan, and then if you come to this chart, so let's find another one. Let's do a trade on Lemonade, right? Does anybody have questions on LULU? Many of you are already in it. I didn't go full size, but my first target, I'll take half off at the break of the high, if that happens, and then I'll take the rest off at that second target. Usually when price comes up into this high, I take half and then I set a break even stop on the remainder. So it's a free trade. Can I explain exactly what to do with Tesla stop mean? I don't know what a Tesla stop mean is. Oh, is Nate? Oh, that's for Nate. He just set, he's stopping out of his Tesla trade, meaning he's closing it. Means it's not working. And in a day like this, it's just not working. Okay. So you can also do this same sort of trade plan without actually entering the stock. So let's look at this lemonade. Okay, we've got a trend line coming here. We love this stock. It's I've traded this 3 or 4 times in the past week or so. So I'd like to get in it, but I'm not ready to get in it, right? Although it is at its point of control, so this is not the best example. Okay, but let's just say we think that this zone down here, right? You can see there's a volume node here, and we've bounced quite a bit in this zone. So we like lemonade, and we want to get into lemonade. So I'm going to look at the options, right? I'm going to look probably out to next week. I kind of like the 80s. They're at a 50 delta, so that's great. And I'm going to say, okay, I want to pick up lemonade if we can come down into this range and or this trend line. So they'll kind of be the same. So I would put on my charts, see if this will let me write on my charts. Okay. LMND, I like it on the daily charts, pretty good, isn't it? Squeeze on the daily. Yeah, LMND, daily squeeze. I'm looking at the December 26th, $80 calls. I'm going to buy around the $75 level. And what I'm going to do is put an alert on that rectangle so that it lets me know if price gets down into that range. Okay, so we have December 26th, $80 calls, buy around the $75 level, and then take profit at the $85 level. Whoops. All right, so that's my plan. Now, right now, looks like a pretty nice lotto spot on lemonade. So I'm going to go to today's 82s. Well, you always front running my trades, Nate. I see how it is. I'm going to buy the 82s for this week because I like this one. That's a pretty big spread, but I'm going to see if I can get them for 116. No, maybe 120. Come on, give me a little love. Just a little love. All right, got in at 124. Yeah, I know. I'm glad I could bring this ticker to your attention, Nate. Um, generally, I would expect that this would be something you'd miss. So, but you see, we've kind of pulled back today into that point of control, and I like that trade for a short-term trade. So again, we're on the aggressive side into tomorrow, right? Lulu's moving as well from our trade earlier. Already up 11% on Lulu. Awesome. So a more conservative way to trade this would be to wait until a move down into this area like we just laid out. And then I just took a bounce play on LMND for this week, which is a more aggressive play. My plan would be a stop below this level here at 78.62 and a move back up into about 83.36. Now, I've been doing this long enough that I don't have to write that down, right? I guess remember that plan, and I can execute. But what I do recommend is if you're new, write those things down, put those levels on your chart, mark up your chart. Take the time to mark up your chart. It makes a big difference. And what you'll find is if you start marking up your charts at different levels, and then somebody says, oh, look at, what do you guys think of, Lulu or whatever, and you glance over at Lulu or something else, and it's right at a level you had previously marked and labeled, and you don't even have to think. You just go, oh, I like it at this level. Pull up the option contracts, and away you go, right? But you can't do that if you haven't spent the time marking up your charts, making sure you know where your levels are, making sure that Lulu is something or Lemonade is something that you want to play, right? So you're not reactionary. You are you've done some pre-planning. You're ready. You've done the prep work so that you can come in here and make the right play. And this works on both a swing trade standpoint. I still have time. Good. On a swing trade standpoint, kind of an overnight bounce standpoint. This even works on things like sniper plays, right? Now they happen fast enough that they're kind of hard to write down on your chart. But if you see, like, for instance, today, well, let's go to a better one. Yesterday has a little bit more range I can show you, right? Yesterday we made a sniper buy off of this signal right here, right? Boom and boom. Okay, it was into a gamma exposure level, and it was reversing right there. It was perfect. I think it was maybe a 30% winner or somewhere around there, if I remember correctly. But even though these are happening quickly through a level, there's always a trade plan in place. Okay, and so that trade plan is, here is the signal, right? This signal, we're on a 1 minute chart. I was actually looking at this on a 30-second chart. Where'd it go? That's today. It's coming. 30-second chart's big. Okay, here we go. Where I got a signal here on this bottom candle. Okay, got a signal, and then we got a confirmation 2 later. So as soon as you can still do those long trade, no, that's not the right tool, sorry. You can still do those long trade, right? You get the confirmation, you're buying the long there, and your stop is below the swing low, right? And then you're targeting a 1 to 2 risk to reward. So even though that happens on like a little 30-minute or 1 minute candle scenario, it's the same, right? You have to have a plan for every trade. Now, I don't write this on the screen because there's just no time for that. That all happens in 1, 2, 3, 4, 5 minutes. That was a 5 minute trade, right? But having a plan and knowing how to stick to it is super important. And what we'll get into, we get into this a lot during the, in the room during the day. People have questions, or people have trades that they're stopping out of, or any one of those things. And we get into a situation where people are like, what happened? How did I lose so much? And we pull up the chart and ask them, what was the trade plan? Right? What was your idea? And when somebody can articulate that, then we know we're in a place for learning to happen. And having a growth mindset as well is very important. So there are great people in the room that will be like, I just took a max loss, or I just took a major loss, and I want to know why. And yeah, it's fine if you use me as an example, right? Because what we want our P&L to do, right? You want your P&L, you want days and days and days that are going up with smaller losses, or individual trades that are going up and a smaller loss, and more trades that go up and a smaller loss, right? This is what your P&L should look like. Your P&L should not look like this. Win, 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 loss, 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 right? Win, 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 big, huge loss. Win, 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 big, huge loss, right? We have to keep our losers, and losers are part of the game, and we'll get into this on Thursday when I do the psychology, trading psychology and discipline presentation. But we want these losses, these downturns, to be smaller than the run up, whether that's one trade or 50 trades or whatever, right? And then we want the next leg to be up, and then the loss or losses to be small, right? That's the way you want your P&L. Nate likes to say from bottom left to upper right. That's what you want it to do. And that takes making sure that you're taking a trade that has a 1 to 2 risk reward or better. Sometimes 1 to 3, 1 to 4, etc., etc. Because you're gonna have losses. But if you can be disciplined enough to continue, and the other side of it, which we'll get into on Friday, is when the trade goes against you, making sure that you are exiting the trade and not letting it deteriorate, and living trading on hope, right? So being disciplined and keeping those losses to a 1 and those wins to a 2 or a 3, then you're in the right mindset and in the right frame of mind. So we always recommend writing all this stuff down on your chart so that you can remind yourself what the situation is. And then you also don't have to ask, what are we doing with this trade, right? You are ready to either take your profits or exit the trade because you have a plan in place, right? Does anybody have questions? Man, we haven't gotten much out of this market, have we? It's just not coming back around. Where are we here? Let's go to a 5 minute. It does look like it's maybe trying to curl a little bit to give me my 67.50 pin. I like a 67.50 pin for the day. How do you write on the chart? Are you using TradingView, Fred? Oh, in Thinkorswim? There's tools that you can write on the chart with, for sure. Um, it's just been so long since I've used Thinkorswim. All right, let me check the gamma exposure levels. 6750 is still the biggest. It was looking like it wasn't gonna be, but it's shifting back again. All right, come on, Lulu. Give us what we want today. I wouldn't be upset if you just went up to the first target by the close. I wouldn't be angry at you. What are we up in Lulu right now? 21% in Lulu? Yeah, I'm not mad at it. You know, on the more conservative trade that we talked about for next week, if Lulu kind of comes up here and sort of caps out right here, right, and comes back into point of control tomorrow, I might do another longer term trade for a bounce out of that area. Or even a wick down like it did today. I mean, that's a scary 30-minute wick right there. But man, to get December 26th contracts here, now that's magical. So for those of you who don't mark up your charts, the other thing is, if we had marked up this chart before this morning, right, and it was one of the things that was kind of on watch, and let's look at this on a 1 minute really quick, right? We knew that, hey, we might like something down there. This is a 1 minute of today. Now, if we had our value area low blue line on there and we said, you know, we're really into Lulu right now because it's popped up from earnings, it's consolidating sideways, and we open up this morning and watch in 6 minutes this move right back down into here, and then some stabilization rounding. That's the best time to be like, yes, please, I am taking that. And then you're in business in a much better position. You're in like I don't even know what that would be, but you know, you're into a trade. I love it when it happens, because you've pre-marked up your charts and you have a plan. I mean, you're way down here at a 1 to 13 risk reward, which is bananas and fantastic. You didn't get filled in Lulu? Huh. It wasn't moving that fast, but you know, that certainly happens. It's not the spread is a little bit too big to market into, so you do have to limit. You do have to put a limit in, but if you are good, you know, if you are comfortable in your trading platform, you can usually adjust those limits pretty easily. On Lemonade, yeah, I'm just using look at this channel, right? I mean, it's just playing in this channel. This is a great spot to buy all these support levels here. It's just chart reading essentially. I'm feeling pretty good about swinging Lulu overnight. I think the market has kind of put in a low-ish. I'd like to see the market work its way back up, obviously, to my 67.50 pin, but not because of that, not because I have a butterfly there, but because, I talked earlier about the SPY, right? And this being OpEx week. I don't know if everybody was in here. So this is Monday. Here, let me get rid of the volume profile. That's Monday, right? Tuesday, Wednesday. We'll have a Thursday here and a Friday here. This is the gap between Friday and Monday where we did put in at least an initial low on Friday. What would be a typical OpEx week? I don't know if it's going to be a typical OpEx week, right? Sometimes it's just a sell off or run up kind of OpEx week. But generally, we're just sucking premium, and so we're pushing away from this sort of general center area, and then we'll work our way back up into it. I keep drawing, we kind of go above it and come back below. But generally, where you kind of start and finish the week and start the next week, either Thursday or Friday, you kind of come back to that general range. It has to be a typical OpEx week. So, believe me, I've seen it not do that. So this isn't, it's not a guarantee, but that's, generally, if you kind of chart them and month after month and figure out what the general pattern is, that's kind of what we see. So if on the SPX here, if we were, to kind of start to work our way back up to here into the end of the day, and then, maybe get a little bit of a gap up tomorrow, all of that would start to make a lot of sense to me. Right, into the end of the week. That doesn't mean it's going to happen. So I'm not, I joke around that, I'm Nate Stradamus, but I'm not. You just take the data that you have in front of you and you try and make the best choice. Yeah, I was going to look at that just as we were talking. Let me look at, is that the 19th? Yeah, it's the 19th. Let's see what the largest gamma exposure level is. For the 19th on SPX, well, there's quite a few of them, but right now it's 6,700. But let's look at the SPY for the 19th. I mean, it's 670 right now, but very closely behind it with a lot of volume is 680 on the SPY for Friday expiration. So, and today's daily volume in the SPY for this Friday's expiration is the 680 Stephen is the highest. So I could definitely see that being a probable shot for Friday, for sure. It's dealer's choice, John. Nate Stradamus, or Nate Stradamus, depending on, really what it depends on was I right or was I wrong? If I was right, it's Nate Stradamus. If I was wrong, it's Nate Stradamus. Tilo, yeah, you can. I mean, you can. There's tons of ways to look for stocks that are, near all-time highs or in a channel. I think even Finviz has a free. I'm not sure if it will look for a channel, but and then they'll just show you a bunch of stocks that are in a channel. Oh, screener. You might have to pay for the screener part. I mean, we obviously use SAM to look for trades that are in a TPS setup. Um, and those tend to be, they're not necessarily in a channel, but they look like LULU here. They've spiked up. Now they're consolidating around the moving averages before potentially another move up. So that's what we tend to look for. But you can just once you get comfortable looking at charts, you start to see, okay, this is a beautiful chart, or this is in a crazy channel that I'd like to play both sides of. You just kind of it's just the more you look at it, you start to really recognize patterns. I remember when I was learning, and Nate was my mentor, and he was first teaching the TPS method, and I would scour the internets, or scour the charts to try and find the best woodpecker TPS looking setups, and I got pretty good at it. And the best was, at the beginning I'd throw them in chat, and then Nate would pull them up, and he'd be like, oh yeah, that's a great one, this one looks great. And then I started, that didn't excite me anymore, because I knew I could find a good chart. But then I would, get into trades because the chart was good, and then wait for Nate to find it and get into the trade, and then be like, oh, I'm already in that one. That was always very satisfying. So you just kind of learn to find the types of trades that really work. Yeah. And then now he just front runs my trade ideas. So, and then if it doesn't work, he blames me, which is totally fine. I'm used to it. No, it's the fun part is that, yeah, I mean, we give each other a lot of grief, but the fun part is, obviously if Nate's looking at a trade, I know it's good. I mean, I don't even have to look at the chart. I know it's good. And I think in reverse, if, I'm commenting on a chart, he knows it's going to be a good one. So let's pull that up and see if it's at a spot to buy or not. And everyone else in the room kind of does the same thing. And we all just help each other find these. I mean, everybody uses SAM, everybody uses different other scanning pieces of software. But when you're in a room like this, you don't have to sit in front of the charts and just grind and look at every chart and figure out if this is going to be a good one. You just kind of sit back, and when someone puts a chart in the room, you pull it up and you go, I like it, I don't like it. And it kind of cuts out all of that overwhelming noise that trying to do this by yourself creates, right? Like when you think of how many stocks there are in the stock universe, and how am I going to go through them all and find great setups? Well, when you're in a community like this, you're still digging for setups because you want to contribute, but other people are also putting their setups into chat, and you have the opportunity to go, I like that one, I think I'm going to take a trade on that, or boy, that so and so is an idiot, that's a terrible, we don't say that out loud, but like if you're reading, that's a terrible idea, I do not want to take that. And then of course you decide not to take it, and everybody in the room is hitting 300% winners on it, and you're like, dang it, that would have been a great trade. But that's just kind of the fun, You you probably don't want me talking on camera. Nope. I have a face for radio. But anyway, that's And again, oh man, I went over. I'm so sorry. Who's after me? Nate, are you going? Hope you guys take advantage of the Santa 500 and join us in here next week. This is pretty much what we do all week. So whether the market's going up, market's going down, we're in here discussing it, trading it, talking about where it might go next, all those things. So come on in and join us. All right, I'll talk to you all later.